Cool. Let me pass it on over. You Coast. Yes, sir. Bet. Let's get it. That's all you, bro.
Yo, what's good? I'm of course going to give people a little bit of extra time, so definitely make sure if you know anybody that just joined your team, anybody in your major groups, just pass this link along. We got room for everybody. Definitely want as many people on here today because personally, I feel like I'm about to go over the most important thing that you could possibly go over in regards to trading. And would definitely be preferred that as many people get this as possible, so that way, it ain't got to be shared multiple times within the groups. This is something that we all deal with, especially with new traders coming in. We deal with a lot of people that just don't understand this concept, like I actually witnessed today in the groups. So definitely share this link because today is the day where we get to go over how to calculate your risk, guys. So definitely gonna make it a quick session, a quick lesson, and then let our boy Zoe get on and teach you guys those smart money concepts so you guys can utilize this proper risk and grow your accounts, in a consistent way that doesn't scare the shit out of you. So real quick, I just want to go ahead and say, I'm thankful for everybody that's actually on here, all of you guys that hop on early, that wait for the links and get on to support myself as well as Zoe. It's really dope. That's really what it takes as well. People that are really about change and trying to actually make a difference are those that, they're there first and they know what's for them. And of course, when they see somebody that has what they want, they right there for it. And I'm the same way, and that never stops, no matter what level you're at. So definitely, guys, appreciate all of you that are on. Appreciate everybody that's going to get on. They don't know that yet, but once they get on, I'm going to show you guys basically how it's done, how to calculate proper risk, just in case you've never done it. To be honest, I was trading for years. Just so some of you guys know, I've been trading for 5 years now. And essentially, it took me a long time to actually properly calculate risk. I used to do it the basic way where I would simply try to multiply, the lot size versus the pips. But in actuality, that's not proper. That's not correct. And it doesn't work that way for every pair. The only over a certain period of time. Typically in school, we're used to line charts, but line charts just don't give us enough information. So just quick example of that is that if I could actually mark off where this wick comes, which is the maximum of where price traveled during that current period of time. If you do a line chart, you do not get that information. You have no clue that the market has actually made it to this point once you look in the past, but it actually did make it up there. And that line charts are just the average of what the candles are doing based off of the closing and opening prices. So we use candlesticks to get extra information on what's going on. So just in case anybody was wondering, that's why we use candlesticks. It gives us extra information that line charts just does not give us. So we use that for extra information. The more information, the better our decision making in the market can be on a trade setup. So let's go ahead and look at a setup. So to find setups, just in case anybody is wondering, we use what we call technical analysis. Technical analysis is simply using the charts, the structures on the charts, the patterns on the charts, and price relationships to make decisions on whether we should buy or sell. So we're not worried about what report is coming out. We're not worried about, anything that's going on necessarily in the world. We're literally just focused on what the charts are doing and actually playing off of price and the candles, the opens and the closes, and where price has actually traveled. So I'm actually going to look at a certain setup. So this is actually an example, I guess you guys, especially the people that's been following along. This here for me is potentially a correction that I had. Basically just playing off of a recent break. So as price was actually falling during this correction here, they made a high, and actually after price took off and made a higher high here, they actually broke that high and it never retested that point. And what happened is that price pulled back and eventually actually came to that level and came right there to it. And from this point, we actually got a nice sharp little impulse that actually broke one of the previous smaller highs. So we had a potential setup on New Zealand USD. As you can see, it played out. I was not actually in this trade. The only trade that I was in was in fact Euro New Zealand. So this hit TP for me here. I was in this, but I was in this for a long time. I think I sold this like way back when. So, and I was just swinging that because I knew that it would eventually turn to the downside. But we had a setup. Nice sharp engulfings off of the low. Of course, they engulfed 1, 2, 3 full bearish candles, took them all out. Came up, of course, you're going to get a retracement off of that move because they still had not took out any of the previous highs yet. So at this point, we're going to get a retracement. And what happens here, typically how I would trade this setup is after I get that first impulse, I'm looking for a retracement between the 50 to the 78.6. Very rarely do I play off of the 88.6. So for me and my personal self, I would have been looking to take this trade from the 78.6 with the stop loss just about a pip or two outside of the low. So also playing off of this retest. So just making sure that, of course, it's right off of the retest. So we'll just give it a general number. We'll just do 15 pips. So let's say I base my stop loss off of a 15 pip stop loss. And of course, the first thing that I'm looking for is a target. So I'm looking for a target. Now, automatically, based on my strategy, price has to break this high if it holds this low. Okay? So price has to break this high before breaking this low based off of the way that I trade. So these are rules that I actually take in consideration. If you followed along with some of my previous webinars, you know what I'm talking about. If you're new, just try to follow along and we'll get there with you. Of course, the next highs are targets, but overall, we actually have this level here, which was a good target that I had in mind for New Zealand USD. which is just simply from the open to the 50% of this candle that we knew that never got tested, which means that there's still money in that candle. There's still orders there that that could definitely be collected. So let's go ahead and push this up. So I don't ever put my TP within it. I always put my TP just short, and if I can, even sometimes below the wick, because I like to just secure my profits. I don't like to play games. So I can actually average this out. Yeah, about 75 is fine. So 15 pips to 75 pip reward. So if I'm not mistaken, that is, what is that, 5 times? Yeah, I think that's 5, 15, 30, 45, 60, 75. Yeah, 5 times. So this is a wonderful risk to reward trade. So off jump, I'll go ahead and write this off. If anybody doesn't know what risk to reward is, something you want to take in consideration into your strategy, because if you don't have it in consideration at all, then you'll kind of lose track of what you could really accomplish with your trades. But let's see. 1 to 5 risk to reward. This is actually more so a formula than it is a rule. People use it as a rule, you know, what that they technically have to use a certain amount of risk versus, they have to use a certain amount of reward versus a certain amount of risk. So they'll never let, let's say, they'll never make it 1-to-1. Like some people just don't believe in 1-to-1, which would be whatever dollar amount you're risking, you have to risk more than whatever you're risking. So you can't risk $20 for $20. They say I have to risk $30 for $20, or $40 to $20, which would be, risking 1 to 2. So right now, this is at a 1 to 5 risk to reward. So the major question for every other person is, what percentage of your account are you actually attempting to risk? So let's assume that's the wrong text. Let's assume that I want to use 1,000 because I like using 1,000, but I know most people don't actually have $1,000 account access just yet. But I'm going to use 1,000 real quick. So let's assume that you have $1,000 account balance, right? So $1,000, probably should have did a dollar sign. So $1,000 account balance. What rate of risk are we actually using per trade? So you can actually select a certain percentage of risk of your account that no matter what the amount of no matter what the amount of pips you're risking, you can make the dollar amount that you could potentially lose the same exact amount. And a lot of new people that come into this business, they just fail horribly to understand this concept. They risk and losses just seem to be some random, thing that just happens and it's just out of their control. Once they enter the trade, whatever happens sort of kind of happens. But there's actually a way where you can specifically make every single loss the same amount of loss. But because this is Forex, you still have room for a limited amount of win. You still have room for a limited amount of potential of growth in your account. And the better you are at managing your risk to reward, you can really, allow yourself to make a tremendous amount of money without even risking a whole lot. So let's just assume, I'm just going to use 5% because it's just so generic. So let's assume that you have $1,000 account, and at 5%, what am I trying to do? 5% risk per trade, right? $1,000 account at 5% risk per trade. So what does that mean? 5% risk of $1,000 is $50. So that will equal $50 of risk, meaning even though that this stop loss is 15 pips, I can calculate how to actually make that only a maximum of $50 of risk, if give or take, a few cents or $1 or $2. It's a way to do that. I'm going to show you guys just in case some of you guys don't know how to do it. So I'll pull that up real quick with our position size calculator. Let me check the comments real quick. Okay, so what would the lot size be on a $1,000 account? I'm finna get to all of that. Guys, give me a second. I'm not gonna run too long. I'll be done by 11:30 exactly, and it will save some questions towards the end. But trust me, I'm gonna get to every single thing. So let's focus on this right now. We have a setup here. It's at a 1-to-5 risk to reward ratio. The stop loss is a total of 15 pips. The take profit is a total of 75 pips, but not too worried. One thing I want you guys to take note of: never calculate your lot size based on how much you can make. When I started, I used to do that. So I know somebody else has done it too. Never place a lot based off of how much the pip potential is for the win. Always place your lot size based off of how much you could lose. You want to control how much you lose. You want to let out of control how much you can win. You want to allow yourself to be blessed with all of this profit, and you want to limit and make those losses as small as possible. That's the name of this game. That's what separates the successful from the unsuccessful in this business. So if you're unsuccessful, you're probably letting your losses run until they come back to until they try to come back to break even, and then you're taking every single profit every single time it looks like the market's about to go against you. If you're doing that, then you're going to be a loser. As opposed to if you do the opposite, then you're going to be a winner. So let's go ahead and we're going to go into our position size calculator. So we're on New Zealand USD. You can actually use this calculator and go to your account size. So we're doing, let's say, $1,000. We decided to do a risk ratio of 5. So you just put 5 and it'll automatically make that percentage. We know that the stop loss was 15 pips. And then all we need to do is plug in the currency pair, which is New Zealand USD. And before you do that, you don't even have to press calculate. It will actually give you the lot size. So on this trade, you can actually use a 0.33 lot size to place on New Zealand USD from here, risk a maximum of $50. And because this is risk to reward 1 to 55, this trade, which was called in my group for the most part in the next level chat, we had a member on our team call this trade from here. And let's say you had $1,000 account. In this trade, I think this trade played out in like 15 minutes. You would have made, what's 5 times 50? Well, of course, that's 25, oh, no, I said 25, $250 of profit, because this is 1 to 5 risk to reward. So that's $50 of risk, $250 of $250 reward on that trade. Just on this simple setup with a 1 to 5 risk to reward. So it's no different as if this was $1,000 account. Just take a 0 away from all these numbers. So if anybody has a $100 account, just take a 0 off of everything. Make this 100, make this $5, $25 reward off a $100 account. $25 off $100, and your lot size just would have been a 0.3, right? Just a 0.3. And somebody says, they say on a $1,000 account, oh, use a 0.01. Yeah, that's cool. And you can do that, if you want to keep it simple until you grow it to a certain amount. But guess what? A lot of times I see a lot of setups, and a lot of you guys do this, where there's a really good setup with a really small stop loss. And it's actually disappointing, because you would be losing like $1.50 on this setup, and you have room to place a larger lot size finally on that $100 account. But because you don't understand this concept, you're not taking advantage of those setups where you really could be using a larger lot size, which is actually within your proper risk and could be completely, getting a whole 20-25% return on your account within just one trade. So the better you could use this, the faster you can actually grow your smaller account. But it doesn't matter what size your account is. Once you put these numbers to work, the odds will, always be in your favor. Let me check the chat real quick. I think that's exactly what everybody's been doing. I'm a loser. It's okay, because I was too, and now I'm not. So it doesn't matter, because once you don't know what you don't know. I didn't know. It's a whole bunch of stuff I didn't know, and I didn't have a person like me in my first few months telling me anything either. I learned everything the hard way for years. So, just be happy that you're here now and didn't have to wait as long as I did to learn everything the hard way. But this right here is key. So real quick, with the little time that I got, I'll just go ahead and slide over to another setup. I'll do another pair that pays out differently. And yeah, let's just do Great Britain Pound CAD or something. Is it a good setup on Great Britain Pound CAD? Oh, kind of, sort of. This is actually a setup that I did take, but I closed it. So for me, Great Britain Pound has a setup here. It's a pretty simple setup. So 38.2 continuation after an impulse. So essentially we have basically an impulse. This whole mess right here is just a correction. It's just crap. Don't get distracted by it. But the thing that I know what's going on is clear is that we had a sharp impulse. So I know that this was wave 3. So wave 4 seems to be here as it completed at the 38.2, correctively also retesting these previous highs that were broken. So for the most part, I would typically expect that price will come to pop this high, if ever so slightly. It could go farther and then pull back, but that's typically how this would go. And it's not impossible that it comes back and then goes as well. But as long as it doesn't touch the 50, this is basically still confirmed for a wave 4. So I did take this trade from here. How the rules go. So let's go ahead and pull out a long position. So yeah, I entered at the 38.2 along with the retest. The stop loss, I'll put it at the 50. So I'll just make it 20 pips to make things perfect. And then by rules, this has to, at the very least, break this high per my trading rules. So I'll go ahead and place that at 80 pips, make this 20 perfectly. All right, cool. So this is 1 to 4 risk reward. So I'll go ahead and clear the charts a little bit and write it out and plug it all in. So I'm showing you guys how to use this. And by the way, this is just the long and short position tools that I'm using. Simply, you can change the colors to this, but red, of course, is negative, green is positive. And this just is a cheat way of showing you the risk to reward. It's a cheat way of showing you the amount of pips on each setup. It's a very, easy tool to use. So real quick, $1,000 account. The trade is 1 to 4 risk to reward. So we're just identifying this for the purposes of calculating what the dollar amount that we're going to risk versus the reward that we're potentially going to make. Remember, whenever you enter a trade, you should already have predetermined what the dollar amount of loss is and accept it. Too many of you guys are entering trades, and because they're in drawdown, you're just closing. You're closing unnecessary trades that turn into wins. Just because you see red, y'all get anxiety. It's okay. Red is not that bad. It's not. Losing is bad, but the red is not bad. It doesn't mean anything negative. You can be in red all day and then make $1 million. It doesn't matter as long as the trade does not blow your account. So predetermine the risk. So let's see, 5% risk. 5% risk is what we're going for. We're going for 5% risk. Of course, 5% risk equals $50. 5% risk equals $50. So, and yeah, this trade, 20 pip stop loss. So this is all based off of the stop loss. Remember, you can't base anything off of your take profit. So cool, we already have $1,000 put in. We already have 5% risk. So this is how easy this is. In the background while you're trading, you can have this up on your phone or on your laptop, just already ready. And as you're trading throughout the day, just update the pips and the currency pair, and everything else is taken care of for you. So pips, 20 pips, currency pair. This is Great Britain pound, CAD. It's already calculated. Look at that, guys. This trade is a 20 pip stop loss trade. The other one was a 15 stop loss trade, but the lot size is actually the same. So this is showing you guys that these different pairs, they are valued differently. They pay out a different price per pip. It's not all the same. So even though these are two different pips, the lot size actually still can, you know, for risk to reward